Hello, everybody. Welcome to Wall Street Hackers. This is our unique show, in which we discuss the stock markets. We look at the quotes of the day, the stories of the day, the news of the day. And with that, we're going to bring in the hacker himself, a graduate of economics from UCLA. He also received a law degree from the University of Miami and a master's in business administration from New York University, spending 17 years in beautiful Manhattan, learning everything we need to know about the markets, none other than the hacker himself, Peter Bennett. Peter, welcome to
Hey,
your
Nick.
show.
Oh, thanks. I always like that introduction. Welcome to Wall Street Hackers. We have another edition, 2124, and you can catch new Wall Street Hackers every Thursday and every Saturday, depending on your distribution channel. So the markets, we always start with the markets. We have kind of good news and bad news. If you watch so many financial shows, so many news, the S&P has hit a new high. And as a matter of fact, both the S&P and the Dow were recently at all-time high, just within the last week. And the S&P had hit, quote, the sixth new high. And so it sounds great, except for one thing. If you look at the S&P in December 21, over 2 years ago, it was around 477. Yesterday's close, 482. So if you were in the S&P 500 for over 2 years, you were getting about less than 1%, approximately. And that doesn't count the effects of inflation. So I don't know what the last 2 years inflation was, but it wasn't pretty. So maybe it averaged 5%, whatever. I didn't research that. But let's say it is 5% roughly. So you've lost 8% on every dollar you put into the S&P 500. And I'd add a footnote about tech. If you weren't in those 7 tech companies, you've lost a lot more, but even counting the tech companies. So it's not all exactly roses if you listen to what the financial shows are trying to push. It's just an example of the market's delusion, which we're always talking about for over 2 years. The market's now projecting still 5 rate cuts. And this is just perfect evidence, too. So just a month ago, there was an 89% chance that there was going to be a rate cut in March. Well, what happens now, it's well under 40%, about 40%, and from 89, and just a month later. And I would say, I think it'll be probably zero, although I'm not going to bet on that either. But based on Chairman Powell's comments this week, I don't think there's a chance that there's going to be a rate cut. And they shouldn't be rate cutting. Why? Because they're not winning the war against inflation. This has been going on, and inflation is a tough battle to win. Unemployment is near 50-year record lows. Energy helped inflation during the fall and since June, basically last year when it was falling, but that you can't count on at all at falling to help inflation. If anything, I think it's going to rise in a minute or two. We'll get into some of the reasons why. There's a good chance the energy is going to start going up again, and that will then feed into the energy inflation cycle and the whole cycle of causing people to need to raise rates. To raise prices. So we're far from that. Of course, government spending both on and off the books is totally, I would say, out of control or close. We're in an election year. It's not likely to change. And the government is spending trillions and trillions. People say 34 trillion. I say probably 125 trillion because I count the off the books gap adjusted debt. And I don't see that on television a whole lot or financial news shows or news reports or magazines or anything. They always say, oh, it's 34 trillion. We're in trouble. What if it's 125 trillion, which I say it is, roughly, counting Medicare and Social Security money that's already been spent, and that money will have to be paid eventually. So here's just some recent headlines that, by the way, I wrote a lot of that before these headlines, and then I just saw these headlines in the last day or so. U.S. job openings rise in December to highest level in 3 months. So going the wrong way again. Unemployment is at the 50-year low, and it's going the wrong direction. We're now over 9 million unfilled jobs. So how exactly does that create pressure on the labor market if it's 9 million unfilled jobs? And then oil, which I always say is the bull in the china shop. So here are just some of the reasons why energy might be going up and is less likely to be going down, and that will affect everything. One, U.S. commercial crude storage could be 66 million barrels below the 2023 level and 3.5 billion below 2022. So we actually have less oil and people are driving. Number two, OPEC compliance is probably going to be strong in this coming quarter. Three, China is fixated on boosting their economy via stimulus, and a recovering Chinese economy will use more energy by definition. So, and then of course we have political instability. Everybody knows about that. Not only could there even be a potential Middle East war, which I don't think there will be a full-out war, because Iran doesn't want that. They will lose. But also, there's what's going on in the Red Sea, which has two impacts. One, it causes the ships to have to travel much further, and they're using a lot of extra oil just to get to where they're going because they can't use the Red Sea as much. And two, it will drive shipping costs up and also lower demand, not even related to energy, but it will lower supplies versus demand in terms of the ships will take longer to get there. So that could cause a supply crunch. So energy not going to help. And of course, again, government spending not going to help, especially in an election year. So quotes of the week. I have two, both from Barron's dailies. One from Tuesday. The Fed has backed itself into a corner after opening the door to the prospect of rate cuts at its meeting in December. That's what I said. I could not believe Powell said that. It was so dovish. It goes on. Anything less dovish this time around risk stalling or even reversing the S&P 500's recent record highs. Right, record highs. Okay. And the other one is from Friday, 126, Barron's Daily. The biggest and fastest increase in interest rates in a generation hasn't crashed the economy. And because monetary policy works with a lag, it's too soon to say interest rates have had much of an impact in bringing inflation down. Again, exactly right. I don't see it coming down. And the Fed's higher for longer, which I call not so high for longer, the Fed actually needs or needed to raise it. Eventually, it will wear down the economy, but it's going to be in terms of, pushing inflation down, but it's going to be a really long, slow battle. Normally, they'd have to be higher now to fight. And I've been saying that for 2 years, and inflation is down, which I'm not surprised at. But to get to 2% target rate is a long way to go. So 5 most interesting stories of the week. Number one interesting story. President Biden told reporters that the U.S. border is not secure, the U.S. border with Mexico. He was asked whether the frontier was secured following some remarks to a bipartisan group of mayors. He said, quote, "No, it's not." Now, that's a little confusing to me. Number one, for 3 years, Homeland Security Secretary Alejandro Mayorkas has been saying to Congress and everybody that the border is secure. So how is it that it's not secure now when it was for the last 3 years? And he obviously works for President Biden. So it could be possibly because it's an election year coming up. And this is a very big issue. If Biden runs, which he probably will, and if Biden loses, which could go either way, this will be a huge issue for him. But I do get, because there's reasons why I'm always on top of the media for hurting the Democratic Party and hurting the American public by not reporting things honestly. This is why he could maintain this for 3 years and now reverse. And I don't even think anybody's asking him questions about that. So it's not serving either the Democratic Party or the public or anybody for that reason, how corrupt the media is in general. Number two, most interesting story. Iran launched 3 satellites into space that were part of a Western criticized program. And they had previously launched rockets, but they failed. But now they have launched a missile into space, and this is going to help their ICBM program. And they maintain the largest arsenal of ballistic missiles in the Middle East. So on Friday, France and Germany and the United Kingdom condemned the satellite launch. They said, quote, "We have long-standing concerns over Iran's activity related to ballistic missile technologies that are capable of delivering nuclear weapons. These concerns are reinforced by Iran's continued nuclear escalation beyond all credible civilian justification." So they're enriching uranium closer and closer to having nuclear bombs. They can launch a missile into space. Yeah, I'd say that's a little concerning. That's a good way to put it. I don't know what else to say about that. It's pretty amazing. In another Iran-related story, so this one everybody's heard of, but there's a few interesting little takes on this. Iranian proxies have now killed 3 U.S. citizens with a drone attack. 3 points of interest. One, President Biden has been warning Iran not to attack during the last roughly 160 attacks. So something was probably going to happen eventually. Number 2, the drone attack actually got through U.S. missile defenses only because the U.S. thought it was a U.S. drone returning to base. So these missile defenses are very effective. And I always think back to Ronald Reagan when they made so much fun of him, calling it Star Wars, when he was talking about missile defenses and shooting down missiles. And they criticized him, saying, "Oh, it's Star Wars, it'll never happen," and making brutal fun of him. And this is what Israel's using to protect themselves against missiles, and the United States is using, and this is technology, and technology is obviously going to get better. So it wasn't just Star Wars. Number 3, I didn't know this, but the attack drones of that type that Iran's been using cost about $30,000 each. But the missiles that the U.S. used to intercept them cost about $2 million each. So it might be a little financial imbalance. Of course, we need to protect, but that's quite an expense to shoot down a $30,000 missile. To get a little lighter, because those were pretty gruesome type stories. Number 1, interesting story number 4. The Chipotle founder created robot-powered fast food startup Kernel to set up its first location next month. So Kernel has a meatless menu and has a almost totally automated kitchen. It's staffed by as few as 3 people. It uses computer screens, slots, and chutes that form an assembly line. There are customers order the food electronically. Automated kitchen handles most of the work. There's a conveyor belt into the oven for cooking. Ingredients for salad are automatically doled out. The first storefront is going to be at 315 Park Avenue, New York City, in February. So it's really interesting that this is happening. Technology is moving on. But again, one of Wall Street hackers' concerns is how many jobs are going to be lost in the next decade and more and beyond to AI and to robotics. It could be very disruptive to the economy. And finally, another light story. The world's largest cruise ship just launched. It's called Royal Caribbean's Icon of the Seas. It's 1,200 feet long and is the size of almost 4 city blocks. It has 20 decks and holds 7,600 passengers and 2,350 crew. So basically, it's about 10,000 people on a ship, and that's the size of many towns, including one of the towns I lived in when I first got married. So we'll take a quick break, and then we'll get into the pick of the week, dividend pick of the week, and our discussion. See you soon.
One of the things that business owners forget a lot is to prepare for their own retirement.
Hi, my name's Nick Palavita, and today I'm with a very special guest, a certified financial planner, a chartered retirement plan specialist, and president of National Pension Partners, Max Couliet. Max, tell me what you do at National Pension Partners.
Well, Nick, we help successful small businesses and professionals put together retirement plans that provide them the maximum retirement benefits and big tax deductions at the same time.
Well, how do you do this?
Well, we get on an internet conferencing system with the client. We review their goals, what they want to accomplish, and then put together strategies to help them in implementing a retirement plan that benefits them, not everybody else.
Well, that sounds really good, but how much does this cost?
Well, it's really not bad because the first consultation is free. That allows us to go through and discover whether this strategy works for that business and for you as the business owner, and helping you maximize your retirement.
Well, Max, how do we get this free appointment?
It's really pretty simple, Nick. You can either go to our website below or call us at 877-252-1692, and then we can set up a time with either myself, Nick, or one of our other retirement plan specialists, another CPA or advisor in the office, to go over this with you and make sure it fits for you.
Hi, my name is Lewis Haupt. I work with National Pension Partners, and I work with businesses to allow them to put the maximum away that they can for themselves and to save taxes.
Hi, I'm Brad Coyle, and I'm the brokerage manager at National Pension Partners. We're always analyzing plan fund choices in order to ensure the participant's success.
If you want more information on how we can help you and your business put more money away in a retirement plan than you ever thought possible, contact us at the website below or call us at 877-252.
And we're back. So with the S&P up a whole 0.5% a year, roughly for 2 years, investment selection is very important. And the Wall Street Hackers model portfolio, by the way, is fully invested. It's not like we're holding a lot of cash back. It's just that you have to pick the right stocks. And energy, along with technology, have been the two places to be. And so technology is tough right now because it's so valued and each company is different. I'm going to mention, one tech company next week that I'm dabbling with, and I like it a lot better than the others. But right now, I love the pipelines as always. MPLX is done phenomenally well. And that's our largest allocation, and it's up a lot in the last week or two on a very good report. Pipelines are great because North America is energy rich. The midstream energy suppliers are going to be needed for decades to come. They have high yields and they're demand driven to a good extent. People need energy, so they're not going anywhere. Hey, Nick. And also, construction of interstate pipelines now is very difficult compared to what it was. Now, you think that would hurt the industry, but the existing pipelines become very valuable when you can't build new pipelines or you have more difficulty. So the investment of the week, disclaimers first. Entertainment only, no guarantees. These are only our opinions, and you should consult your financial advisor. There's never a guarantee. Look, if there was ever a guarantee on anything, you just put every penny into an option, but people don't do that generally, except for gamblers. So the investment of the week is MLPX, which is not to be confused with MPLX. MPLX is our largest allocation. It's a pipeline. But MLPX is a global X MLP and energy infrastructure ETF. It's a exchange traded fund. And this is one of the few mutual funds we're in. The allocation is 2/3%, and only because there are very few reasons why I wouldn't do more. Number one, because I have so much in pipelines, about 30% now, because it's appreciated, and I'd rather pick which ones. But it's a great diversifier for a portfolio, and also it's a great diversifier within pipelines, and it has a lot of advantages. Number one, you get about 25 different MLPs. They do own MPLX and maybe EPD. I didn't look for that one, but maybe it's about 5% just in MPLX. But MLPX, first of all, does not require a K1 to be filed. So that's one of the disadvantages why I don't own a lot of pipelines, because the accounting costs can really add up. It has, again, 25 holdings. It has a yield right now of 5.8%. it has done phenomenally well since 2018 in terms of increasing dividends, really well. In 2018, the dividend was 16 cents. Now it's 60 cents. So you're getting actually 4 times the dividend. If it continues like that, we're talking about 5 years. In 5 years, if I'm getting 20%, that would be nice. And we'll see how that does. But that's really a lot of potential. And it also has the portfolio has a current price over cash flow of 5.9, which is very low. That equals a 17% cash flow yield, which I always look at any company. What's the cash flow? That tells you the real story. And that's a huge cash flow. And according to E-Trade, it had an 11% cash flow growth. So as a part of a pipeline portfolio, 2/3%, no problem. If you hate, K1s and you don't want to get into that, maybe you do more. Again, no guarantees, but I like it a lot. So panel discussion of the week. I love Tony Robbins. I really love Tony Robbins. He's one of my sources of philosophical information. And first of all, there's so much to obviously like about him, but one, he believes people can change, and also people can change their environment. And also, he doesn't believe in a victim mentality. And that's, I think, too pervasive in our society. It's like, you're a victim. So many people tell you, on the news or whatever, you're a victim, so you can't succeed. That's exactly the opposite message we should be sending people. So this last week, I did a 3-day seminar that you offered for free, actually. And it was really good. And here's what he said. I'm just going to paraphrase because I didn't write it down exactly, but this gets what he was saying. He said, the history of the world is good times create weak people create bad times create strong people create good times. So that's the panel of the discussion of the week, and we'll do a quick background. But the question is this definitely true? Is that the cycle? Good times create weak people create bad times create strong people create good times. Is that the history of the world? And or is that going to be our history going forward, our future? So just a few backgrounds. One, Rome. You always have to look at Rome because it was a very successful republic for 500 years. And then it was an autocracy for another 500 years, but it fell. Some of the things going on today, a lot of people might say there's an analogy to it. Some of the trends, financial spending, maybe a non-focus on the military and trying to overextend on the military. A lot of mistakes Rome made. At least you could look at the United States and say, are we following that path? Also, as everyone knows, the world, a lot of the world, the United States and many other countries have constantly been in instability. We go from prosperous times to really tough times, prosperous times, tough times. It seems like that's been the cycle of the past. So the question is that definitely going to be the cycle of the future? Nick?
Oh, wow. Yeah, I did see that quote. That was pretty interesting, Peter. We do go through cycles. I mean, if that's what you're saying, that is true. Do cycles create different styles of people? Maybe, or maybe what they do is they highlight people more. They go, oh, look at all these brilliant generals that just appeared in World War II. Well,
Right.
they're always brilliant generals. There were just no wars for them. So now that
But the
there's
good times, well,
Yeah.
let's
get to
wait.
be highlighted.
Let's break it out, though. Do good times create weak
but
people?
one thing the investors do need to look at is
Right.
we do go through cycles, and this is one
Oh,
of the
no
hardest
doubt
things
about
of
that.
capitalism. Now, communism says, "Whoa, everything's the same." See, that's also not true either. They try to project everything's the same, but it's absolutely not the same. And then sometimes, like in Venezuela, who decide, "Oh, we're going to confiscate everything. Communism is great. We're going to take it." Their economy is the same. It's flat and bad all the time. So some of them don't go through cycles, and when they don't go through cycles, and you're flat and bad all the time, like Venezuela,
Yeah, that's not good either. No, bad
it's
all
not
the
good
time.
either. Right? It's not good
Right.
either. But the investors do need to realize that there shall be cycles, and right now it looks like the market's on an up cycle, but how long is that going to last, and when is it going to turn? And
Well,
that's
that's the
what
question,
we try
yeah.
to look at Wall Street Hackers.
Yeah, well, and really, that's all true. I mean, I think that Tony Robbins, as always, is probably mostly right. I'll say mostly. It's not quite as simple as that. I mean, but here's what I think. I think that when times are good, people start focusing on less important issues in terms of survival and prosperity. And I look to Maslow's hierarchy of needs, which is a really significant theory in psychology. But when I was an undergrad, I started in psychology, almost completed the major, and then I went to economics. But Maslow's hierarchy is something you hear about all the time. And basically, it's a pyramid, in case you don't know what it is, which says there are levels of needs that need to be met. And that's where your basic focus remains. So the first level is physiological needs: air, water, food, shelter, sleep, clothing. And if you watch survival shows, you know, if you don't have that, you don't have much. So you need to get that in order before you start thinking of the next thing. The next thing is safety needs: personal security, employment, resources, health. The next one, the third level, is love and belonging, like intimacy, family, sense of connections, friendship. The fourth is esteem, self-esteem, status, recognition, respect. And finally, self-actualization, which is the desire to become the most one can be. So basically, I think it is human nature to move up this chain or move down the chain, depending on the needs. So my theory is that this Maslow's hierarchy goes with what he was saying, because if people are struggling, you know, if as in the Depression, if people are worrying about food and sleep, they're not worrying about self-esteem and self-actualization quite as much. You know, it's not as simple as there's no need for love, there's no need for safety, but the focus does change. So when those basic needs are met, I think the focus maybe moves off it, and then maybe the focus of society isn't enough on that, so it can slip a little bit. But then if it slips too much, what happens? All of a sudden, the need for food and shelter and economic security and employment increases, and people say, forget about self-actualization and respect and love, you know, although those are important, you know. So it's really a shifting focus in human psychology. So I think that he's probably right, and I see a fair amount of that in at least our focus now, because it has been good for a long time in many ways. You know, we haven't had a really significant depression or really significant recession for a long time, you know, and so people can focus on issues that aren't quite as important as when people are starving. Then it's like, we need to take care of people who are starving. So I think there is some truth to that. And so I'll give Tony credit again for that. Nick, any comments?
Yeah, I mean, you know, the thing is, the cycles will appear, and then different people appear during cycles. Right now, we're in a pretty good cycle, but the thing that you have to look at is 2008. A lot of the investors that are investing today weren't around to watch the markets collapse in 2008 and take years to recover. In other words, it wasn't like, hey, you're coming back.
And not just 2008. What happened in the 70s? You know, when you had massive inflation.
Yeah.
You know, nobody even considers that. What if inflation, and I'm hoping not, I don't think it will be, but what if inflation goes to that kind of level? I mean, that would it blew away the market back then.
Yeah.
And
look, the interest
rates don't know, because it, you know, so there are cycles and risks. And unfortunately, we're in a time of change. So I hate to be negative again, but this is the way I see out there the rapid change. Nobody really knows the effects of a lot of this. I mean, number one, the debt is so huge from the government, and nobody's really taking care of that. There's no focus on it, or very little focus on it. And again, everybody's concerned about the 34 trillion, but it's really 125 trillion. And that's coming due in the well before the next decade. And all that money that was going into Medicare and then being spent is now going to be needed. So not only is it not going to be funding things, it's going to need to pull money in or to print money. That alone is it's very disruptive to the economy.
Well, Peter, how many CPAs ever get elected to Congress?
I don't know. I think we need one.
I don't think we have any. And
well,
so
you know what?
You have as a ship being run by it's a ship of fools. You don't have any CPAs in Congress. You have
I don't know if they're fools, but there's they're smart people, but politics drives their needs, I guess. But it doesn't even take a CPA, I would add, to figure out that GAAP accounting, generally accounting principles, should be.
Yeah, but come on, Peter. You have an MBA from NYU. How many MBAs from NYU are in politics?
Yeah.
Okay.
On the other side, the generally accounting principles means generally accepted accounting principles. These are the most basic rules that companies and households follow.
I haven't done a survey, but I think it would be very interesting for us to do a survey on the financial backgrounds of congressmen and senators.
Yeah,
I'm definitely afraid. I can do it because the internet knows everything. It'll take some time. And then we might find some very startling statistics that we don't want to announce on Wall Street Hackers, or frankly, anywhere.
Yeah, I have no idea. I do know a lot of Congress people are successful business people, lawyers, whatever. But you know what? Again, I don't think it's the people or some of the people. It surely is fault because they're even too short. But the problem is in politics, it will be very hard for politicians to break the news to people. It's like, I wouldn't quite call it a Ponzi scheme, but it's almost like that. Like, let's say you're running a Ponzi scheme and you have to tell people, oh, they've been running a Ponzi scheme for 50 years. Now, I'm not saying it is a Ponzi scheme, but it's sort of like that in a sense because the money was supposed to be put away for society, and it's been spent every year. So how do you break this?
It's never designed to be actuarially sound. When we look at the Social Security system was set up years ago. It was a PAYGO system, which a lot of pensions are set up on, but today almost none of them. Most of them have reserves that pay forever. But this was a PAYGO system. PAYGO systems don't work in shrinking populations. We have a shrinking population with a PAYGO system. It fails.
Or an aging population, not a shrinking population, just to correct you.
Yeah, well, we have a growing population. We have a shrinking workforce relative to the person that was there.
Exactly.
It had to be Ponzi'd up, and it's not. It's going down.
Well, yeah, and then this has been quote. They say this all the time: the third rail of politics, and nobody wants to talk about it. The problem is, it was 50 years away. Then it was 40 years, 20 years, 10 years. Now. It's not decades away anymore. Now it's years, and soon it's going to be months.
Medicare in the next 5 years is going broke. And
well,
the thing is,
that's what we're talking about. Yeah.
And you know what they're doing? They're having hearings on Zuckerberg's Meta and how many people are watching social media. Okay?
Right. Well, there is a problem with that too. I have a problem with some of that.
They can understand that. They can understand. These puny little minds can understand it. They don't understand 34 trillion in debt.
Right.
They don't get it. They don't even know what debt is, but they don't understand that Medicare is going broke. They don't get it.
Well, I disagree. I think they do understand. I give politicians credit, a lot of them, not all of them. Some don't want to face it, so they're just living in a delusion, that we talk about, like the market has been. But the thing is, a lot of them look. It's the third rail politics, and even if you start talking about this stuff and everybody else isn't on board, then you're probably out of office pretty quickly, and then there's no point. So it's not an easy position to be in, and to break the news that things have to change. And we were talking about this last week. Should there be a fiscal stimulus committee? Fiscal stability commission. And the answer is absolutely yes. One, and two, they would have to listen to it. And I'm concerned that even if they do it, they won't really listen to it. But you know what? There is a tsunami financially coming, unfortunately, and it's not the wisest strategy to stand on the beach watching it and then say, it's here now, and I haven't done anything for it. But this is the months, again, decades are turning into years, and the years are soon going to be months. And then it's going to be like, okay, 20 minutes to zero, countdown. Medicare, is going into deficit, and Social Security too. And they, so they have to focus on this.
Well, see, my fear is Medicare will go into deficit. Then they're going to turn and look at the American government to subsidize it, and then they're going to find the American government is broke. Now, what are they going to do? In other words,
and money is one thing.
The reserves are broke. So you have a broke system on top of a broke system. It's like if you're flying an airplane, one engine goes out. Do you know you can still fly the airplane? And the other engine
the second engine goes, yeah.
Now what do you do?
And unfortunately, I think we're running out of time, but that's the point. I mean, the point is the time to act is now, and it was 10 years ago and 5 years ago, but this is really going to be an important issue for investors. And why it's important, by the way, lock in income, long duration income now, in my opinion, because what the government's going to do is they're going to have to move interest rates down to zero or negative. Inflation will be higher. It's going to be a very tough environment, stagflationary type, but this is the time to lock in income for life if you can, because it's going to be tough to get later when interest rates go back to zero, as it was 2 years ago when rates were very low. You get 2% in a muni. What if you get, a 0.25% in a muni, zero in the bank, So it's tough. Anyway, we are out of time. Thanks for watching. As Kim always says, get healthy, get wealthy, and we will be on next week. Thanks again.